If you've ever taken a trade that looked perfect and it instantly reversed on you, this is probably why. It's not your strategy, it's not bad luck. You're using the wrong time frame at the wrong time. In this video, I'll walk you through how I use higher time frames to build directional bias, lower time frames to refine entries, and how to identify key bounce and reversal spots within the market. If you want to live trade with me, there's a link in my bio, but let's get right into it. There's a ton of different ways to use time frames, but I'm going to show you how I like to use them. So breaking down time frames for me is very simple. Okay, we got bias, entries. Wait, actually, let me redo this. We got short-term bias, long-term bias, trade entries. Okay, and there's one more that I like to use. Okay, I know it's going to sound similar to short-term or long-term bias, but I have two specific time frames that I like to use for rejection / bounce spots. All right. So these are the four main things that we use time frames for. All right. So let's start with long-term bias. Long-term bias, I'm going to be using anything above the 1 hour. So 1 hour or above. Okay. So how do we do that? Well, if price puts in this big giant bearish gap, right? And then we inverse all of these gaps. Now I'm bullish to the highs, right? So now I'm bullish to here, right? And possibly here. But obviously once we sweep this much liquidity, we can turn around. So it's the same for the bearish side. Let's do this. We put in this giant bullish gap here, right? We delete this. We get the candle close below here on the 1 hour, right? Well, now I'm bearish to the lows here, right? What happens after this low, will always depend on how we react to the left. Oops. So once we sweep this low here, right? We also sweep this low. Well, now we've tapped into more 1 hour gaps, right? So we could always bounce right there. Now let's go to the 4 hour. Same thing, right? So right here, we have this big giant bearish 4 hour gap. So right here, let's say before we get the inverse, right? So when I see this, if this was live time, right? When I see this big 4 hour gap, I'm going to say, okay, I need to see how we react out of here. Even if I'm bullish, I need to see how we react out of this gap, because this 4 hour gap could easily hold and send price lower, right? But once we get the next 4 hour candle close above, okay, now I'm bullish to the next highs. Oops, right there, right? So 4 hour, 1 hour chart. Okay, so we didn't get to the high, but we still broke this high. So 4 hour chart and 1 hour chart are my main uses for bias. It's very rare that we have to go above the daily. Lately we do, because we're so much lower than normal. So on the daily chart, we don't really have candles right here on this current contract. So we're having to zoom out a lot lately because we're down quite a bit. So 1 hour, 4 hour chart will be my long-term bias. So long-term bias, M60, M240. So same example here, since I see it already, right? We have this big 4 hour candle. We sweep these highs. What do? We tap into this 4 hour gap, right? So once price sweeps these highs here and we tap this 4 hour gap, I have to wait and see how we react. If we keep closing up through this gap, well, then my bias is going to stay bullish. But if this gap holds and we reject, then my bias will stay bearish. Now you have this gap holding, plus we also inverse this higher time frame gap as well. So now we have delivery. We have a bearish 1 hour gap holding, and we're inversing bullish gaps. So now my bias is bearish to the low. Right? So simple. Now, short-term bias. Short-term bias will be things like 30-minute and the 15-minute chart. Short-term bias will be something that most of us probably use more often because we're executing on the lower time frame. Like most of us are not swing traders. We're not holding trades for a long time. We're executing, in and out, usually in the same day. So for 30-minute and the 15-minute, it works exactly the same way as I just explained with the 1 hour and the 4 hour, right? So here, price puts in two 15-minute bearish gaps. As long as these gaps are holding, I'm going to say, okay, we're going to be bearish. But once we inverse both of these gaps, look what happens, right? Now we're bullish to the highs. Now let's look over here. Another example, right? We have this 15-minute and this 15-minute, right? Price could easily have come down, reached into these gaps, and held, right? But it didn't. We just destroy them and close below. So once I see that, okay, now I'm bearish to the lows. So you can see now we're bearish to the lows. Now, so that would be our short-term bias, right? 15-minute, 30-minute chart. Let me go, where's my short-term bias? 15 min, 30 min. Okay. Now, trade entries. Trade entries, I will barely ever enter on anything above the 5-minute time frame. So for trade entries, we've got, let's just write that down right now, actually, since we're going to go through it. So for trade entries, our time frame is going to be 30 second, 1 minute, 2 minute. No, wait, let me do this faster. And anywhere between 1 minute and 5 minute. Okay, so those time frames will be our entry time frames. So if I'm going to look for a potential trade, let's say we sweep an area of liquidity that I'm interested in, we get an inverse. Yes, this will be recorded. So for example here, 5 minute, right? We sweep this low, we sweep this low. I'm not going to be standing here staring, waiting for a 30-minute inverse for a trade entry, right? Like I want my trade entries on the lower time frame. So for example, we inverse this 5 minute. It's the same exact thing. So the trade entries and the bias works virtually the same way, right? On the higher time frame, we inverse a 30-minute down, we're bearish to the lows. On the 5-minute time frame, we inverse this 5-minute gap that swept liquidity. It works the same way. I'm going to be bullish to this high. And this is how we enter our trades and make our money, because it's basically the same thing as using higher time frame inverse bias, but we do it with trade entries, right? So we get this 5 minute. Our entry would be on the close. Boom, there's our target. So that will be all the ways that I use time frames. But I want to talk about a few things. So the 15-minute and the 30-minute chart will be probably my most looked at time frames, and I'll tell you why. Because I also include 15-minute and 30-minute as time frames I like to use for rejection and bounce spots. So we're going to include 15-minute and 30-minute in there as well. So while we're trading throughout the day, right, we might be inversing a 1 hour or a 4 hour on the higher time frame, but there is always a lower time frame gap that could either hold or reject price. So when I am looking at the market and watching and analyzing to try and see, okay, where are areas that we've bounced from or rejected from a lot already, right? Or areas that we haven't touched yet. So when I see, let me find one real quick. Okay, here's a good one. So see this 15-minute BPR here, right? When I see this, let's say our bias is bearish, right? But we have all this liquidity up here. Well, yeah, this can be used as a target if you want to be bullish, right? But this is also an area where I can say, wow, we've rejected from here a lot, right? So we put in this bearish 15-minute gap after sweeping buy side right here. We put in this bearish gap. We have this BPR. Price pushes down, delivers out of this bullish gap, comes up. Now, just like I was explaining earlier, I'm going to watch and see the reaction. So if I wake up, this happened all before market. If I wake up and I'm like, okay, my bias is bearish today, and I see this 15-minute chart and how many times we've reacted out of it. 1, 2, 3, 4, 5 times, right? Now I can say, all right, if price, puts in some sell side, we pump up and sweep this buy side. Now I can look in this area to short from. Why? Because I've seen it hold and reject multiple times already, right? So that is a high area or a high probability chance of price to hold or reject from once you've seen it hold or reject before, if that makes sense. So like here's a good example, right? Wow, this is a really obvious 15-minute gap. Price swept this low, bounced out of the bullish gap, tried really hard to close above this gap, but couldn't, right? So now I'm like, oh, maybe I mark this out because this could be an area that I look for shorts. So, oops. Why? Because I've already got confirmation that it's held what? 1, 2, 3, 4, 5, 6 times, right? So now if my bias is bearish, we get up into this area where we've held multiple times. Now I have multiple confirmation that I can look for shorts. So I extend out this 15-minute gap, zoom in on a lower time frame, right? And try and find my entry, which would probably be, let's see. Don't really see a clean one here, to be honest. But yeah, you get what I'm saying. Oh, here we go. See, so now it's all based on using previous bearish or bullish gaps as inverses or if they hold or not. So for bias, if we inverse a bearish gap, your bias switches bullish. If you inverse a bullish gap, your bias switches bearish. And the same exact logic is working on the lower time frame for our trade entries. So we push up, sweep buy side, we're holding a bearish gap. We inverse this obvious gap, right? Our trade entry would be here, right here on the entry. Because why? Now our bias on the lower time frame switches to the lows because we've inversed this gap. It works exactly the same way. Thanks, man. Thanks for being here. Does any of that not make sense? Like, truly. It's all just based on do gaps hold or do they get inversed. That's how you determine your bias and your trade entries. It's all tied in the same exact way. Higher time frame, lower time frame, it's all the same behavior. It's all fractal. If a bearish 1 hour gap to the left is holding, I'm going to assume shorts. If a bearish 30-minute gap to the left is holding, we're in that area, I'm going to assume shorts. If a 1 minute bullish gap gets inversed in that same area, I'm going to take a short. It's the same exact thing. I know it seems kind of weird if you don't do any of this yet, but seriously, once you start seeing this, that it's all the same, it's like, it's insane. The bias, the trade entries. See, like right here, we put in a bullish gap. We inverse that gap. Where do we go? Lower. Right here, we put in a bearish gap. We inverse the gap. We go higher. And obviously, it's much harder to determine this in live time, but the logic is all we're focusing on right now. But the 15-minute and 30-minute as rejection spots is one of my favorite things to use, especially during the day while we're trading. Because we're more likely to be on the charts during a time where a 15 and 30 minute is going to be more relevant than a 4 hour and 1 hour. Yes, there's obviously times where, hey, we just swept a low, we need delivery, let's check. And we don't have 15-minute or 30-minute, then you can use other time frames to find delivery, sure. But like, let's just see how this is right now. We inverse this. Yeah, is price continuing, reversing, or consolidating when it hits a major gap? See, we inverse this gap, we go to the low, right? We inverse this gap, we sweep the high. Inverse the low, inverse the bear. We inverse this bearish gap, we sweep the high. We inverse this bullish gap, we sweep the low. That is the logic. Bullish gap holds, look for longs. Bearish gap holds, look for shorts. But with the way the market's going right now, I would probably only look for shorts. Like, we got to use a different. So we still have. Man. So if you guys saw in Market Thoughts, I posted the other day that if we inverse this weekly gap, the likely our draw on liquidity is down here. And I think we're going to end up tapping into this. I think we're going to end up tapping into this monthly fair value gap this week. Dude, thank you. That makes me happy because that's all I ever try and do. Like, I don't want, this can be simple to understand. It doesn't have to be confusing as shit. But I really think this will be the only area that I start looking for longs, to be honest. Right now I'm bearish way down here. There's no way. So use NQ1 to chart this week coming up. We have a lot of news this week and I'm excited. Oh, dude, I love being able to drop like a 10-minute video that explains the same shit that takes someone else. Well, it doesn't take them that long. They chose to make it take an hour and a half. Like, it's been 20 minutes and I feel like we covered quite a bit. Does anybody have anything else they want to talk about? I think I covered everything for this topic in particular. But if anyone has any questions about other stuff, I'm ready. Bet. Thank you. How do you find draw on liquidity? Like, how do you know where? So the way I like to find draw on liquidity is genuinely just looking for obvious swing lows and trend line liquidity. So like, ooh. So it's just all ping pong, bro. So when we sweep these, oh wow. So check this out. If I see something like this, if I'm looking at the 4-hour chart and I see something like this, right? And we sweep this buy side, right? Tap into this gap. We get this inverse. There's no way I can't think this isn't our draw on liquidity. So like right now, for example, on the weekly, let me go to the other chart. So right now, when I'm looking at the higher time frame, right? Because obviously we're bearish, right? So I need to find bearish targets. So old swing lows like this, right? Because what do we always say? People, when we take buy side, are getting stopped out, right? So when I look at this chart and I see this low is gone, this low is gone, this low is gone, this low is gone, I can't do anything else besides think we're going for here. Right? So it's kind of like process of elimination. Like once stuff is gone, you got to look for where is next. And that's right now after seeing all the sell side we've swept, you know, I can't where else do we go besides these lows? So let me go to the 1 hour or 4 hour chart. So 4 hour chart, right? Down here we have stacked lows and this BPR. Dude, just you gotta find stacked lows that haven't been taken. Stacked lows or highs that haven't been taken. And once we take one side, you go to the other side. How do I reference the higher time frame to lower time frame? Example, bias is bullish, but the current hour one candle is red. Would you still be? Yeah, I would. So that would all depend on what I would have to look to the left for that, right? So let's say, okay, we've been bearish for the last day, right? But when I look to the left, we still have this big, huge bullish 1 hour, right? So we might be bearish. The 1 hour chart might look bearish here, but if I zoom in on the 1 minute, and we like have stuff like this, all this stacked liquidity, right? And then we get like a banger inverse. We sweep some lows on the lower time frame and then we get an inverse long. We're delivering now. Then I'll be willing to take that. So it'll all be based on delivery. So it's less for me. It's less what the current candle is, and it's more of like, do we have delivery to the left or not? Because if we don't, then it's a no go. But like, let's see. For example, yesterday actually we had a really good call out during stream. It was this. So this 1 minute here, right? So you can see how much we've been bearish here. Boom. Oops. Boom. boom, 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 right? We're bearish here, but on the lower time frame, I have all this LRLR and this little swing high and potentially these stacked highs here. So when I see us manipulate down, we sweep this low, we put in this low, then we also wick down and sweep this low, and we inverse this 1 minute gap that's been holding, right? It's all the same as the bias. So now it's just on the lower time frame. So now we've swept a low 3 times, right? Now we get this inverse here. All we have is trend line liquidity up, right? You know, when we get this close, I'm like, yo, take this. And let's see, where was it? Right here. I think at that time we did have, well, I think we were bouncing out of these stacked 4 hours too. So at that point, I'm like, okay, there's my delivery at least. So this is an area where you can see here, price put in these group of 4 hour gaps, these stacked 4 hour gaps. We swept buy side. We tried to push down, but we couldn't close below. So these gaps held once before, right? These gaps, oops. Dude, I don't want the pen. So these gaps, right, have already been proven to do what? Send price higher, way higher, right? So now we finally reach this area that we haven't been to since September 5th. And the last time we were in this area, we went for longs, right? So when I see that, now I can add it to my confluence to take a long, even though the lower time frame is bearish. Does that make sense? Or the higher time frame is bearish, sorry. So just always make sure to check for delivery. And if it's somewhere that we've held once or rejected from once before, it's better. But yeah, that's pretty much it.